This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to talk about the market trade action we saw on Tuesday, a relatively quiet day with the soy complex, the upside leader, corn relatively firm, wheat under a little pressure, but overall, again, it was fairly quiet. But here to join us and walk through things, our good friend Brian Splitt with agmarket.net. Brian, great to have you back on the show, sir. How are you today?
I'm doing good, Jesse. It feels like Groundhog Day, except it's October. So it's the harvest doldrums and very quiet, low volume trade.
I'm sure, yeah. It just keeps everything quiet with harvest going, not only the trade, but I'm sure, even the phones maybe a little bit as farmers are out there really busy in the field and, they're kind of just running fast and trying to get this crop out. But, we still watch the markets. We still keep our eyes on things, Brian. And it felt like overall, maybe just a little technical trade on Tuesday's action. I know we'll dive a little deeper into things, but your overall thoughts, did it just feel kind of technical in nature on Tuesday?
Yeah, it's kind of one of those things. I'm starting to focus a little bit more on the March corn chart versus the D's corn. And the way it looks to me, we've been in a upward trending channel since late August. And, when we get down to that lower end of the channel, which for March is going to be, let's call it 680, we just haven't seen any selling to push us through that support. So, selling dries up, you kind of recover. I think maybe if we can get through some of the highs that we've been making over the course of the last week or so and get back above the 10-day moving average, maybe that'll spur a little bit more technical buying. Potentially try to retest the upper end of the channel, but I think we're going to have to see some slightly friendly data from the USDA come the November WASDE report to make it up to that upper end of the channel, which for March is going to be up in that 720 vicinity, and just seems like a lofty area to get to without something to spur us to push us there.
Yeah, it just feels like, you mentioned Groundhog Day, and I've compared it to watching paint dry. There's plenty of news items out there. It's just not really fresh news. We're trading these same stories and headlines and feelings and conflicting kind of bullish, bearish factors throughout this grain trade, corn especially. We've really just kind of been in this tight trading range as of late, Brian.
Yeah, I feel like the market's a baby bird right now, and the news is just mama bird regurgitating right into the baby bird's mouth. That's, it's just the same stuff here. There's nothing new, nothing meaningful. We probably have some things coming around the corner that will move the market. We know in November there's going to be some things such as the grain corridor in Ukraine. Does that get renegotiated? Does that not get renegotiated? What happens there? We're going to have the election, of course. So I think there's some things right around the corner that'll provide some volatility, but at this point, it's just kind of status quo for the time being.
I think this lends maybe some thought though as well too. I know harvest, people are busy, markets aren't doing much, but it's also a time to maybe not get complacent. If you get a window to sit and take a look at your marketing plan and look at your risk management strategy, it's a good time to maybe do a little bit of reassessing before we get to some of these potentially big news items that could impact the market trade that you mentioned there, Brian.
Yeah, I think complacency kills. So again, it doesn't seem like there's a reason to pay attention to the market right now because it's not doing much. But I think there's things that producers should be thinking about. And, some of that might be some overage bushels that you don't have the ability to store on farm. So generally, when you deliver those bushels, you'll have a short period of time to price it before you incur storage fees. And once you incur the storage fees, you're probably paying 25 to 30 cents just to store it till the end of the year. So, is that wise? Think about that. If you pay 30 cents a store to the end of the year and something changes and you get a 30 or 40 cent pullback in corn, that's a 60 to 70 cent pullback because of what you're paying for storage. So I think that's something where maybe if you're going to pay those fees, I'd rather send it to the board of trade and use it for some call options and just know that your risk parameters are set and your downside risk is limited to what you're paying for the call. Other than that, I think a lot of producers had the idea of storing beans or selling beans out of the field, and now basis made a change because of the river scenario. There's carry in the market right now, so that has producers thinking that they should store their bushels. And if that's the case, I just think you have to really realize that we've had soybeans holding the same support level for the last 3 months, and that for January beans would be roughly 1360. So we're advocating maintaining coverage under the board because of that. And if we end up taking those lows out, I think you're going to retest your summer lows around 13. In the very big picture, we've got a large Brazilian crop looming. And I think a lot of people are not paying enough attention to what's going on in China. And I think China sees our approach to the chip scenario, to AI as economic warfare. And we know with the trade war that because of that, the Chinese didn't buy our beans for quite a while until they really needed to. And that could be a scenario again as we get into 2023.
Well, I'm glad you brought up China because I think I agree with you. I don't think people are necessarily paying enough attention to what is going on there. President Xi Jinping being installed for another 5-year term, unprecedented move there. And, we just think about all the geopolitical tension between the US and China, the Chinese economy as well, some of the concerns about their economy. I know there's a lot swirling around this US China relationship that it could be a major factor here as we continue to move forward. Brian, it's just, I agree with you. People aren't paying enough attention to it. And I think it's something we really have to watch here for the next several months.
Yeah, I just feel like the market is at such levels that we've gotten used to, and I think a lot of producers feel like the market can't go down, and maybe it won't. Who knows? But this isn't the time to act like the market can only go up and prices are going to stay at these levels. And that would be my concern. Bigger picture would be more macroeconomic stuff that we see the balance sheets, we know things are tight. But that whole sentiment can change very quickly when you think about big picture world currents.
I know as well, Brian, export inspections on Monday, pretty strong on soybeans. It sounded like we got a lot out of the PNW with the river issues on the Mississippi. What are your thoughts with just this export picture, soybeans, corn, et cetera? I know we're still sluggish on the corn and wheat front, but what about this soybean side?
I always have a hard time being friendly about inspections. To me, the positive thing about strong inspections is once it leaves the country, those sales can't be canceled. But I feel like being bullish about good inspections is kind of like being bullish about the same thing twice, right? It was friendly when the exports happened. Is it still friendly because they get shipped? I think you have to be friendly about new sales. That's new buying. The shipments is not new buying. So if we started to see a string of new purchases by China, where they came in and were buying a couple boatloads several times a week, then that to me is something that I think we could say, okay, maybe that we're seeing good value here and the Chinese continue to buy. But the inspections to me is not something I'm going to buy the market because of good inspections.
Brian Splitt with agmarket.net is our guest analyst here today on Market Talk. Brian, looking at the wheat markets, I know you watch the KC market pretty closely as well. And just looking at how these markets are acting, wondering chart wise what you're seeing there. I know, we've obviously got the wheat relationship with the dollar historically, but just What are your thoughts of this wheat market trade? It's been kind of interesting, it feels to me, the last couple of weeks.
It has. I mean, we've definitely seen some pretty big moves. You think about a couple weeks ago, that bridge to Crimea, took some major damage, and we had the wheat market price in quite a bit of premium uh, right away, just to give it right back a few sessions later. So KC wheat right now is kind of revisiting some lows that were scored right before the quarterly stock report at the end of September. And I would like to think that with the renegotiation of the grain corridor in the Black Sea region coming up, that this area should find some support and should find some value. The 50-day moving average is right in this vicinity. So we had made some lows around 928, 929 over the last week or so. Again, you go back to late September, it was in that same vicinity. Jabbed through that area a little bit today. Then we came rifling off of those lows, a little over 15 cents. So there was some pretty strong buying once some stops were run. But in general, I think the Black Sea region sentiment is going to be probably the most important thing moving forward for the wheat market. We've got a very good sense of what our winter wheat production was this year. So that's not an issue now. We're still in the discovery process for spring wheat, so that could be something that'll have an impact on wheat overall. But I think the general marketplace wants to know what's going to happen with the Black Sea region. And it appears that the boats going to Ukraine to load up grain out of those ports, they're going to stop arriving in early November just because they don't want to get stuck there in case this grain corridor breaks down again. So I feel like that should be something that, again, does provide a little bit of support to the market, at least in the short term, as we progress over the next 2 to 4 weeks.
One more thought on wheat. Are you worried about the emergence kind of lagging in winter wheat planting in the southern plains with how dry everything is down there right now, Brian?
Yeah, I mean, it's something that you absolutely have to pay attention to, and it's not only the emergence there, but the other. And I keep going back to the Black Sea region, but
Mhm.
what are they getting planted? So you
Yeah.
think back to last year, they had their crop planted before the invasion happened, so they at least got the wheat in the ground, and then it just became a concern of could it be provided the tender care agronomically to maximize yields, and then could they harvest it? Right now, it's can they plant 100% of the typical acres that they would? And if they can't, then that's just wheat production right off the top of the world balance sheet that's not going to be there. So when you take that and compound that with production concerns domestically, those are two things where we're potentially losing production out of two of our global powerhouses at the same time.
Brian, let's talk livestock. Let's talk the cattle market. Relatively mixed, quiet day on Tuesday. It feels like the sentiment is that we could see $2 to $3 higher in the cash cattle market this week, although it's been pretty quiet so far. We had a fairly neutral cattle and feed report last Friday. What's your thoughts in this cattle trade overall here as we get into this week?
Yeah, cash has been strong. We've seen some what seems like pretty good bids passed on recently, and the December live cattle chart was really just trending sideways for a long time. We had what appeared to be a double top on that chart. I think 152.37 and 152.22. We had pulled back off of that area somewhat aggressively, and as of recently, we've taken that out. We closed above it. That's the area that needs to stick. And I think if we see some additional setback here and a little bit of a correction off of overbought status, we need to hold that 152 area. If it does hold on a bit of a setback, I wonder if we're not going to see as the Packers continue to raise their bids. And just from a chart perspective, the measurements would suggest that maybe we could see futures try to approach 160, and if that's the case. So what we've been really doing lately after breaking through is just buying some December puts at that 150 to 52 strike price, just to keep something somewhat of a good floor under the market over the next few weeks until these animals get priced.
On the hog side, feels like we're maybe consolidating a little bit here near the recent highs. Any thoughts in the hog trade, Brian?
Yeah, it's been a big mover. You think about the
Mhm.
move that we had from these levels down to the low to mid 70s just to rifle right back. And I'll admit, I mean, this market has definitely come back more than I thought it would off of those lows and much quicker than I thought. The index was well above where futures were trading. And my thought was that maybe the index would come and maybe they'd meet halfway, but the futures have just come right back up. And so we're getting to the point where we're overbought again. I think we're probably due for a little bit of a pullback there, and maybe retrace a chunk of this rally that we've had. But this hog market's notorious for seeing major V bottoms and V tops, and it definitely does not waste any time making moves.
Brian, as well, you mentioned the macro side earlier. Just love your thoughts here. I know there's kind of talk swirling around. We could see interest rate hikes in Canada on Wednesday, in Europe this week. The Fed expected to raise rates next week. We're watching that dollar. We're watching a high VIX on Wall Street. It's a lot of these macro factors with the inflation recessionary talk. What's your thoughts in this macro market as it stands here as we near the end of the month of October?
Yeah, big moves in currencies right now. We've seen this dollar index. I mean, it's not very common. You see, full, handle moves in one session, which we had today to the downside. And I think you're going to continue to see an awful lot of volatility in currencies. You think about what happened a few weeks ago in Great Britain with the gilts. Now they have a new prime minister. That had the pound up quite a bit here recently, the dollar down. And I think there's still quite a bit of risk in sovereign debt in general. So you think back to 2008, that was mortgage-backed securities. That's debt. That was bad debt. And that bad debt really brought the global financial markets to their knees. And a lot of the commentary lately is, oh, this is the worst whatever since 2008, or this is the first time the market whatever has done this since '08. And I keep hearing since '08. And the sovereign debt, if that does become an issue and that bubble pops, I think that's a much bigger problem than the mortgage-backed securities in '08. So hopefully that doesn't come to fruition, and the powers that be can keep things stabilized. But that would be my biggest picture concern for all of the markets in general.
Well, to wrap things up and kind of put a bow on this discussion here today, you mentioned a lot of great points as always. Thinking about marketing maybe for the 23 crop, any thoughts, any differences with any commodities that we're looking at for that 23 corn, beans, wheat, etc. Anything different with your strategy or anything you'd want to add for guys who are thinking about some of their new crop marketing right now?
So a little bit more concerned about new crop beans than corn. So recently it's been, hey, new crop beans for next year, 13.50. Um, Maybe do it in HTA, accommodate that with a $14, $16 call spread for roughly 50 cents. I know that sounds like an awful lot, but that would provide a net worst case scenario on beans for next year of $13 basis futures. That gives you about a year to manage that call spread. So if there is a big downward move, you can buy back that sold call, carry your $14 call into next summer, see what type of weather plays out. For corn, we've been really more concerned with producers that are locking in high inputs right now. So we've been using March short dated options, which are expiring at the end of February. February is when we make our spring average price for crop insurance. So we're really just trying to hedge our crop insurance revenue levels, providing a $6 floor there. And once we know that we've got a good revenue level set, then we can use that as our base for our marketing program moving forward. But if the world changes between now and February and something major happens, if our revenue levels drop, at least we'll have money in the commodity market account, in the futures account, to help offset that. So that's what we've been focusing on as of late.
Well, Brian, always appreciate the time and insight. And I know if folks need a little advice for their marketing plan, want to reach out to you and the team there at agmarket.net. You guys have a ton of great resources that people could check out. What's going to be the best way to get a hold of you guys?
Our general line is 844 4 ag market, so 844-424-6758. My direct line is 815-665-0463. And our website is www.agmarket.net. And we did just get compliance approval to announce we are having a conference February 6th, and that'll be in Nashville downtown. So get your hat and your boots and get ready to dance.
Well, we look forward to that. And I know more info, again, it can all be found online, agmarket.net. With that, Brian Splitt, appreciate the time. Thanks for joining us today, sir. Have a great one. We'll talk to you again soon.
Okay. Thank you, Jesse.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.